Stocks versus real estate and real estate versus stocks. Which one is better? Let's find out. I'm going to show you the pros and cons of each of the investments, and in the end, I'm going to share with you my favorite one. Let's start off with stocks. Stock investing in recent months has really been taken off, fueled by the rise of young retail investors, stimulus checks, and free money given to stimulate the economy. And a lot of the young investors, without being able to spend it anywhere, have actually started investing it into the stock market. And with the rise of app investing, such as Robinhood or Webull or my favorite Revolut, it's been gamified and become so much easier to be invested in the stock market, which is great because more people have access to it. Back in the days, it used to be super complicated. So some of the benefits of stock investing over real estate, and the first one here is just so much more liquid, meaning it's very easy and fast to invest into it, but just as easy to sell your stock and get your money out. Especially in the US stock market, those stocks are extremely liquid, meaning there's a lot of trading and volume going on. So to buy into and out of your position is very fast, and within a matter of seconds, you basically have your money back in case you really need it, which is great and a huge advantage it has over real estate. Secondly, there are a lot of options out there. You can do individual stock picking, you can buy an ETF, which is basically investing into an index or market of an entire economy or specific sectors of the economy. You can do dividend investing, so you have a huge variety of stock investing vehicles out there, which again, in terms of real estate, is a bit more limited. Thirdly, it's definitely less time consuming. Unless you become a really day trader, which I strongly advise you against. Usually you're just going to research your stock, and once you made the decision, you buy into it and you just sit there and wait for it to grow over time. And the fourth point, it's definitely less capital intensive. When you want to buy a house, you need a big amount of money to even get started with your mortgage. On the contrary, in stocks, you can get started from $5 or $10 per trade, which is amazing, especially for beginners to really get an experience and get into it. And the more your income grows over time, you can allocate more of your earnings into the stocks, and you don't have the pressure of having to pay every month versus a mortgage you need to pay definitely every month, otherwise you might get kicked out of your apartment. On the flip side, of course, there are a few risky points to consider when investing into stocks. Number one, it's definitely more volatile. Now the last few months we've been really in a bull market, meaning it's been only going one way, and that's up. There's a famous example of a monkey throwing a dart, and wherever the dart lands, they're gonna buy the stock, and even that has been going up over the years. So you don't have to be a rocket scientist to make a positive return in the last few months in a bull market. The difficult part comes when it's a bear market, stocks going down, and we have seen such period, and they will come again because the markets are cyclical. So once things go down and you need the money, you might be selling your stocks at a loss because you need the money to pay for whatever you need in your everyday life. So that's why it's a bit more volatile, especially when compared to real estate, which usually, unless there's a major crisis, is more stable. Secondly, you can't really do anything with stocks. That's a great thing about real estate, and we'll come to this in a second, but they basically just sit somewhere in an account. For some of the investors, it's something you can't really use every day. Cryptocurrency, on the other hand, you could actually use to spend for your everyday expenses. Real estate, you could potentially live in it. Stocks, they just sit somewhere unless you do have dividend stocks, which do pay you a passive income over time. And the last point, taxes is something to consider. So again, depending where you live, there might be short-term capital gains and long-term capital gains. Short-term is usually within 12 months. So if you sell your stocks within that time frame, there usually is a higher taxation on that. If you're a long-term investor, which I'm always advocate of, that means holding a stock for longer than 12 months. Usually the taxation drops after 12 months, which is good. So it means the longer you hold, the less tax you have to pay on it. But again, it really depends on the country where you live in. In some countries it can still be extremely high even after 12 months. So that's something to consider when you compare it to the real estate tax in your country. Now let's look into real estate investing. Starting with the pros, it's definitely less volatile. Again, unless there's a huge financial crisis going on, what we've seen in 2008, 2009, over a 100-year average worldwide, real estate over time has seen some of the most steady and continuous growth. Some of the richest people in the world have made a fortune from real estate, and mostly because it's less volatile. Even in difficult times, people always need a place to live. So that's something that's probably not going to go away. Real estate is developing, but people definitely need a place to live. And with inflation's rising, so is the rent, so is the real estate prices, and everything gets more expensive over time, which is great for the landlord, the owner, because they can get a higher return for it in the future. Second point, real estate is actually a good thing if you want to live in it, right? Because worst case scenario, stock market drops, everything drops, at least you can live in your house or your apartment. You can't do that with stocks. That's just a number somewhere on your broker or on your app. But a house that you pay off and eventually own, you can actually live in it. Third point, and that's tax advantages. Again, it depends very much on your country, but certain countries really have a favorable taxation towards house ownership. Meaning, for example, the interest you pay on your mortgage can often be written off on your taxation. So there are a lot of great benefits out there in real estate, and that's why a lot of rich and wealthy people make use of that. But you have to check in your own country what are the conditions for it. It may or may not be favorable. Point number 4, again, the ultra high net worth individuals in the world invest in real estate because over the years it's been steadily going up, and it's a safe investing. Much safer, for example, than investing into an individual stock or cryptocurrency, for example, because that's much more volatile. It has potential to grow faster, but it is also more risky. And real estate, because of the nature of it, it is more steady, less volatile, and as such an investor can more easily predict the income from the monthly cash flow, from the income, the rent, the lease on the building, and project the future earning potential. And use that income to pay for another mortgage. And over time, by doing this, can really snowball grow the real estate portfolio. On the other hand, some of the cons, it definitely takes time. Real estate is not something you casually do once and you kind of forget about it. If you live in it, there's always something you have to do to fix. And if you rent it out, there's always some issues. The tenants may call you in the middle of the night because the water doesn't work or the heating stopped. Whatever it is, there's so many problems that can happen in a house. So it's definitely much more time intensive. The second point is also much more capital intensive, because there, contrary to stocks, you can't just get started with 5-10 euros. You need a significant amount of savings and capital to even get a mortgage, because often they ask for 15 or 20% down payment, meaning you need to own 20% of the purchasing price of the property in cash that you give to the bank, and they will give you a loan on the remaining amount. But you need to have some capital to start with. No bank in the world unfortunately finances 100% of your property. So you need to have accrued a good starting capital. Next con, it's very risky. Just think of natural disasters, floodings that happen more and more in recent times. Fires, the tenant might burn down the house by accident, people might break into it. There's a lot of things that can happen to the house, the property itself, that are out of your control, which is less likely to happen in the stock market or ETFs because you have a basket of stocks in there. A lot of the companies are spread internationally, so even one small impact in one country doesn't impact your entire portfolio. So that's something to once again know, that there is a risk to actual damage of the physical house or apartment. And lastly, it's definitely much more location dependent. Now, unless you want to take an agency to give you some of the time back, but that would also mean you have to pay them. So that would diminish your returns you get from the property. So most people decide to do it themselves, but that means you have to live in the city wherever your apartments or houses are. Because if you own an apartment in Paris, for example, but you live in Dubai, and your tenant calls you in the evening that the hot water doesn't work, what you're gonna do? You're not just gonna fly over from Dubai and help them fix that. You're probably gonna use some sort of service or company that diminishes your cash flow and return. And you don't have that with stocks. So you're definitely less location independent, because normally in order to have the highest return on your investment, you should be living around the property that you're renting, unless of course it's your own. So back to the question, which one should you choose? Both of them are great options. They really depend on your investing profile. And both of them are definitely better than holding cash in the bank, because that's the worst investment, because you're basically burning money by the day with inflation. Both stocks and real estate are great inflation hedges, because as inflation kicks in, both of them are appreciating in value as well. So you're more safe rather than keeping your cash in the bank. Now for myself, I do own some real estate and some stock, and actually some crypto as well. So I believe in a diversified portfolio, because I don't think that one is superior to the other. In terms of real estate, I actually have a few units that are outside of Europe, and that makes it difficult because I'm based in Europe. So for me to look after those units, I actually had to employ a company that helps me to oversee that. And I end up spending a good portion of the rent for the company. So my initial cash flow projections on the rent and what I earn as income is actually below my expectations, because I didn't factor in that I would need a company. And I don't quite like that. To be honest, in the future, I might actually change that approach and sell those units off and invest some of it into crypto, stocks, and the remaining balance into my own apartment, because I do believe into owning your four walls, because there you have the best of both worlds. You live in the house, the value appreciates, you don't have to pay rent to somebody else. If there are problems, you're gonna fix them one way or the other, and you get to enjoy the investment you made. So definitely I appreciate appreciating real estate, pun intended. I would really recommend to live in it yourself rather than renting units in countries where you don't live in. On the other hand, I will definitely continue investing into stocks, especially ETFs. That gives me passive incomes in the form of dividends, and I don't have to spend too much time researching which is the best stock to invest in. I will continue investing into individual stocks, into companies that I really believe their future growth potential, and lastly, of course, into cryptocurrency as well. So having those three, I think, is a very diversified portfolio. Each one has their benefit, especially in different market dynamics, and the next crash is coming for sure. So don't only rely on one, and don't put all your eggs into one basket. Next, check out the video over here, like and subscribe, and let me know in the comments which one you prefer, stocks or real estate. Thank you so much for watching, guys. Stay blessed, stay awesome, and I'll see you in the next one. Take care. Ciao, ciao.